So today we're going to talk about one thing that holds a lot of traders back, and it's usually that one missing piece that traders need to actually gain profitability. What that thing is framing daily bias. Because you could have your entry model perfectly mapped out, but if you're taking trades in the wrong direction, you're not going to be profitable. So I feel like the best way for me to describe to you how I frame my daily bias is just to move right over the charts, give you some examples, run down my mindset as I'm actually framing out the daily bias. So with no further ado, let's get straight into it. So right now, I've pulled up both the NASDAQ and the S&P 500. When I'm trading, I'm always looking at both these two things. So when I'm determining bias, when I'm entering trades, managing trades, I'm always looking at both. So you're going to understand why that is further in this video. But before we get into this, I just want to remind you the software I'm using is called FX Replay. It's my favorite backtesting platform. It's going to allow us to rewind to any point in time, and I can replay this data at whatever speed I'd like. I can pause it whenever I'd like, and I can trade on this data as if it was live time. So backtesting is the #1 way to improve your strategy. So if you like this, definitely check out the link down below. I'm going to put their link along with my discount code, which is TimB272. It's going to get you 15% off FX Replay, so I highly recommend checking them out. But let's get into this, right? So honestly, for daily bias, as you can imagine, it's going to involve a daily time frame. So it's not just that. That's the first part. And you could actually start on the weekly. There are some people that start on the weekly. Me personally, I'm not one of those people because I kind of think from the mindset that like, if I'm taking trades on the 5-minute chart, the 1-minute chart, like 3-minute chart, these weekly things are not going to mean that much. So I can look on the weekly. I mean, I'll start on the weekly for this video. I can see we swept out these lows kind of over here, right? Getting a reaction off of those. I'm sure on the daily, we've probably shifted structure, right? Yeah. We had this high over here, which was, I'd actually call this most recent high over here. So once we shifted above this high, right, closed above there. So pretty much right now, I'm just looking at market structure, right? Now, in case you don't get market structure, I'll give you an extremely quick rundown. So pretty much, how are we determining a bullish trend? We're determining it by higher highs and higher lows. So every time we put in a new higher high, we should not break that previous higher low. We should respect it and then come up and make a new higher high. And the same would be true for a bearish trend, right? When we're in a bearish trend, we should be making lower highs and lower lows, and we keep respecting these new lower highs, right? So that's how I'm determining trend. So once we're looking at this daily chart right here, right? So what I'm looking at is I'm saying, okay, we had this push down from here. We came back up, made a lower high, and we broke through this low. We actually came up here, made a new a lower high. And then after that, we pushed down, made this crazy push down right here. So once we break above this most recent lower high and get a candle closure above there, that's essentially like a shift in market structure. And it's even on top of that, it's confirmed when we close through it and then we come back down, retest it, and then get a rejection out of it. So this is not just on the daily time frame. I mean, time is fractal, and what that means is like you could have like when you have a pullback on the 5-minute, right? The 1 minute's going to break structure, so temporarily you'll be bearish, trending down on the 1 minute, but on the 5-minute you're still bullish, right? That's pretty much what fractal means. Like on the inside, when you zoom in, there might be microstructure going the other way, but you got to keep in mind the higher time frame what the actual structure is. So that's a change in like the steady delivery right there. So I'd say on the daily we're bullish, and I'm pretty much just going through all these time frames and I'm determining my bias and where we're drawing to. And I feel like when you can get time frame alignment where you can look at the daily, say we're trending up, you can look at the 4-hour, say we're trending up. You can look at the 1 hour, say we're trending up. You get the point, right? When all these time frames get aligned, that's where you're getting the highest probability of trades. So one thing I do look at too is like equilibrium of ranges. So yeah, we are moving bullish right here. But me personally, one thing that makes me hesitate on this a little bit, taking longs. So I'll come out, I'll take my Gann box, and I'll draw from this most recent low up to this most recent high. My Gann box is looking crazy. I just want to fix this real quick. That's a lot better. So a lot of times when we have these large pushes up, right, we've swept out liquidity up here. we got to rebalance at least 50% of this range. Normally, the rebalance isn't going to happen until we tap into some form of higher time frame key level. But in this case, I'm saying overnight, we kind of gapped up. We swept out these highs over here. We really haven't gotten any form of serious like rebalance yet, right? So this is the 4 hour, right? This is the 1 hour. Now, price doesn't always have to come back down and rebalance equilibrium of this range. Like, don't get me wrong, it's definitely possible that we could come back down to this 1 hour. Because when I look at the 1 hour time frame, this is a very prominent gap. And then there's a lot of times when we're moving extremely bullish or bearish, and just the 50% just never gets retraced to. And honestly, the way we're moving right now, I could see that. But, right, so I have all these ideas in my head right now. Does this mean coming into market open, I'm going to blindly go like long or short? No, it doesn't. I'm going to be setting conditions essentially, right? So when I'm looking at this 1 hour fair value gap, this equilibrium, and there's even this new week opening gap somewhere around here, right? So these are areas we could react off of. Am I just going to get a retracement into here and say, you know what? I think we're going to react off that. I'll take a trade like this. I mean, you could. Is it a good idea? In my opinion, not really. No, you're just not waiting for any form of reaction. So when I say I'm looking for conditions, I could say, okay, we have this 1 hour fair value gap right here. If we're going to come down and we're going to retrace into this fair value gap and then like if-then statements, kind of like remember in school they used to be like if-then statements. Same thing with trading. If we retrace into this fair value gap and then we get a reaction out of it, at that point then I can start taking longs. But I'm not blindly taking longs at these areas I've determined previously, right? I'm always looking for some form of confirmation. So this is a 1 hour. I sometimes look at the, for which time frames I'm looking at too. I mean, so obviously I sometimes look at the weekly occasionally. I'm mostly looking at the daily, the 4 hour, the 1 hour. If I'm a little confused between the 1 hour and the 15 minute somewhere or in that like area, I will look at the 30 minute sometimes. Sometimes the 30 minute gives me a little bit of clarity. In this case, not really. But the next time frame I'm going to is the 15-minute time frame, because my model personally, I'm basing all of my trades off like 5 and 15-minute fair value gaps. So this is a 15-minute fair value gap right here. But one thing about my trading, at least, I'll explain this while I'm on the topic, right? So since we rebalanced this 15-minute gap, we reacted away from it. For me to actually consider any trade reacting off this 15-minute gap right here, I'd want to see a sweep of that low inside the gap. So let's say like if we retrace to this area right here, but we never swept out these lows. Yes, technically we're inside that gap, but we didn't sweep out the low that actually delivered us. Unless like we put in an SMT. Sometimes if we put in an SMT there, I'll say, okay, that's good enough. We swept out the low. But I always try to think when I'm taking a trade, we should be reacting from some area and rebalancing towards some area. Not necessarily rebalancing or delivering, I should say. But, so I've pretty much gone down every time frame except for the 5 minute. And honestly, since it's so close to 9:30 market open, I'm not really going to pay too much attention to the 5 minute in this case, right? I mean, because usually I could do all this analysis, but a lot of times 9:30 is just going to shoot one way and it's going to pretty like mess up my analysis. So just to mark out though, I'll mark out this low right here. Maybe I could get a reaction off this internal low. Maybe we could come into like the 50% of this fair value gap right here. But essentially I have all these areas we could potentially reject off of. And if we just don't start respecting any of them, I do have to have a point in my mind where I say, you know what, I'm wrong, we could be bearish. I'm always in my mind saying, you know what, like if this fails, I have to give up my bias, because you can't sit here and say, oh yeah, we're bullish, and then we drop 200 points. You're like, yeah, we're bullish. Then we drop 400. We're bullish. We drop 600. Yeah, we're bullish. Like, you get the point here, right? You're going to cook like that. So, okay, so I'm going to start replaying some price because we've been talking for long enough now. So, since I'm looking for longs, right? Oh, I forgot to mark out though. Honestly, it wouldn't be ideal, but there's also this 15-minute gap right here. So let's see. So if I'm bullish, right? When I was talking about manipulations, I think I brought up that 9:30 manipulation for a second before, right? So I'll mark out where 9:30 open is, right? This is 9:30 open. I mark out 9:30 open. I mark out 10 a.m. open. I mark out 11 a.m. open. Mostly 9:30 and 10 though, because I'm not typically trading past 11 very frequently. But the main concept behind this, right? I don't know if you've heard before about like accumulation, manipulation, distribution. It's pretty much the same thing as power of 3, right? So let's think, in this case, we're kind of accumulating right here. We're not always going to be accumulating, but a lot of times though, at these key time events, what we're going to want to do is we're going to manipulate the opposite way that we want to go, and that's going to stop out traders in the opposite direction, right? So let's say like if in reality we want to go up, if you're a large player in the market, to get all those orders filled, you're going to have to get out people that have sell orders. Because when you're in a sell position, right, it's just an example for bullish, right? But when you're in a sell position, how do you get out of that sell position? You're taking a buy order. And these people placing all these buy orders, they need someone on the opposite end of their trade. So you're in that sell and they're buying it from you essentially. And then they're going to hold that position. That's pretty much the main idea behind smart money concepts if you didn't know that already. But so now, the main reason I said I'm going to be monitoring both NQ and ES is because I'm going to look at that same internal low that I was talking about on NQ. Because there are times where like ES, the S&P 500, might take the area that I'm looking to get targeted, and at that point, it's no longer a valid target. Or if I'm looking for a reaction of some area, we could start to react off ES, and I could miss that if I'm just locked in on NQ. So yeah, so we have swept out this internal low, right? This is an area where I came into the session and I said, we could react off of here, right? I've predetermined this. It's not like a spur of the moment thing, right? This was planned. And I just picked a random date. Like you might not believe me, but I just picked a random date. So, I mean, I might lose this trade. That'd be funny if I'm start talking all my stuff and lose. But, so we saw that this low, we're putting in an SMT inside this 15-minute gap, and we're trending bullish higher time frame, right? So now, not only do I have a good target, like basically, so I have a good target higher time frame, right? Because we're tapping into a 1 hour fair value gap and we're moving bullish. I also right now have a good target at this unfilled 5-minute gap. Because I mean, this is all specific to my trading. You could carry this over into whatever your trading methodology is. But the way I trade is I say 5 and 15-minute gaps, especially after we take out some form of liquidity, need to be rebalanced. So what I'm thinking is, even if we're going to remain bearish, right, this 5-minute gap right here should get rebalanced. And then if we look to the highest time frame gap separating us from this unfilled 5-minute gap is this 1 minute. Like, yes, this 5-minute could open up. Is it going to? I don't think so, honestly, because it's a fresh candle. It's still got 4 minutes left, and we got this clear 1 minute inverse. So we have a higher time frame SMT, but there is not an internal SMT. But for the sake of this video, honestly, this is a trade I would normally take, to be honest. But we'll try to rip this trade and see how it plays out. Just a little bit over a 1-to-1 risk to reward. So pretty much I'm bullish higher time frame, swept out a low inside a higher time frame gap. Lower time frame, we've inverted this gap, and on top of that, I even have a good internal target. Because a lot of times too, when I'm like looking at daily bias, I look at internal targets too, honestly. Like sometimes if an internal target looks good enough, it'll make me lean a little bit more toward that direction, if that makes sense. So basically what I'm trying to say is, in regards to that, is like, let's say up here, there's like stacked highs a little bit, right? All these stacked highs. So that's low resistance liquidity. In my mind, when there's stacked highs, they have to get ran because there's just all these like orders sitting there. And where is price going to get drawn to? Where the most amount of orders are sitting, right? So let's say if I'm like, it's looking kind of bearish, but then we have all this low resistance liquidity up here. Let's say theoretically we have equal highs up here and we have all these unfilled gaps, right? There's all these targets that are bullish that I could use as a target. So I can kind of use that to, if I'm on the edge. So I mean, it's not going to override a higher time frame bias, but something to keep in mind. So I've been talking for long enough, right? So I'm in this position, right? I'm just back testing. So that position did lose. I mean, it's whatever. I'm okay with it. But yeah, I mean, that was pretty much how I framed out the bias for that trade though. And now why not? I'll look for one more setup. So if this 15-minute gap right here got inversed before that setup happened, right? I would have not taken that trade. But now that we've inverted this gap in this leg and we've taken this internal low that was connected with this leg, right? I'm no longer saying that because we inverted that gap, it's going to be a bearish thing, because we've already delivered to where we need to deliver to, which is internal low right here. So I want to see if this SMT continues to hold, because we still have an SMT where ES failed to sweep at this low. We still have the unfilled 5-minute gap, and we're pretty much getting a re-entry off pretty much the exact same setup. I just want to double check, right? There's no 2-minute gap. There's no 3-minute gap, no 4-minute gap. There's no 5-minute gap, right? So we're taking the highest time frame inversion in this leg. And same thing as last time. Even though this gap, I thought there was a gap. I just looked way too quickly. I'm sure there's a 30-second. Yeah, 30 seconds not too clean. But, yeah, this definitely would have been a lot cleaner if there was a 1-minute gap right here. Okay, whatever. So let's see if I can get an entry off the 30-second. So we've inverted the highest time frame gap, separating us from this unfilled 5-minute, and we even had a resweep. So honestly, I'd be willing to try this again. So I can finish up 0.06R, because this is a 1-to-1, but I'm willing to take this. And normally I would like to go break even at this most recent internal high right here. But in this case, only because there's the unfilled 5-minute gap, and we haven't rebalanced any gaps really so far, I'll try this. Why not? Okay, so we did rebalance that 5-minute gap. Now, me personally, at this point, if I was trading, I would definitely be done for the day. Because I like to just not sit here and rip trades all day long. So that first trade, my bias was correct. And honestly, that's a good idea of something I want to wrap up this video with. But so for that trade, right, my original bias was correct, but the setup still failed. Now, when you're determining daily bias, to a point, yeah, you should be confident and say, you know what? I determined my bias. I'm confident in my system. Like, I know what's going to happen. But at the same time, you got to accept there's going to be certain days where no matter how hard you try to figure out this daily bias, you're not going to be correct. There's going to be days where the market just honestly makes no sense. And there's going to be times where you analyze something wrong. There's going to be days where you focus on the wrong factors, right? Whatever the reason is, some days you're going to be wrong on your daily bias. And that's honestly one of the things that I feel like helps my daily bias is I just accept when I'm wrong. Like, on certain days, like, for example, if this trade right here failed, I'd say, you know what? I'm giving up. Like, this trade idea right here is not working. And even if I took a second trade idea, like, let's say I didn't get that re-entry, and let's say we came down to equilibrium of this fair value gap right here, I could maybe try another setup off that. But if that second setup fails, I'm calling it for the day and saying, you know what? Either today is not good price action, my daily bias is wrong, I don't know what the issue is, but I'm not sitting here and ripping trades, because I'm not saying, oh, this is my daily bias, this has to happen, I'm going to sit here and rip trades all day long until I'm right. That's not what I'm doing. So, yeah. Trying to think if there's anything left that I should recap. I only went through 1 day of price action, although I feel like I just yapped so much, and I'm looking at the recording time for this, and it's honestly so long. My webcam's kind of glitchy. I keep noticing that. But I'll go through one more day really quick. I won't take any more trades. I'll just show you how I would have framed my daily bias. That's what we'll do to wrap up. So, Tuesday, right? Oh, this is actually a great way to end this off. So, I talk about this all the time. If you see my other videos, you watch me live trade, you know this is a target I love, love, love. So data lows and data highs, honestly, they are a very strong draw on liquidity. So in this case, one thing I'm doing to frame my bias, before I even move up to the higher time frame, right, I'm seeing that ES was able to sweep out this data low, and it reacted off of it so far. I mean, market open still didn't happen yet, so we could get a good manipulation, but we put in an SMT at those data lows. So typically, when one side is swept of a data high and low, I typically love to target the other side. And also, in case you're not following what a data low and data high is, so you can see the CPI came out this day, right? So when there's high impact red folder news, the high left behind on that 1 minute candle and the low, right? Those are very strong draws on liquidity. There's a lot of traders that are putting their stops, their take profits, whatever at those areas, right? So right now, I don't even have to zoom out. I'm bullish. I mean, but so we're trending up, right? Recently, we came down, we rebalanced this 15-minute gap down here, and then we had a reaction out of it. But I wouldn't like to use this 15-minute gap really. Actually, well, this is one of these things where ES actually makes me second guess myself. Not second guess, but I was misspeaking actually. So because we swept this data low over here, there's an SMT at that low. So because we have an SMT inside this 5-minute gap and we have that SMT like at data lows, I can be bullish. But typically, if this data low right here was in there, the main reason I wouldn't want to be bullish is because I always like to think like this fair value gap right here. I have my arrow tool somewhere. Yeah, so this fair value gap right here, we tapped into it, but we already delivered all the way up here. So this gap already did its job. So until we get a resweep of that low, I really wouldn't want to target that high. But when I'm looking at ES, we actually did come down and sweep out that low, right? Next candle. So we have an SMT at the low, so technically there is a resweep. So I could look for longs. So, yeah, I mean, I'll just go through right? So daily, right? We're trending up. 4 hour, we've rebalanced this 4 hour gap. We've hit these highs, but so this 4 hour already did its job. So I'm not going to base a trade off that 4 hour unless we come down, sweep out that low over there. Same story in the 1 hour pretty much. But we did actually, once we broke this high up here, we put in this new fair value gap, which is this 1 hour right here. We respect that 1 hour. I can't base a trade off that 1 hour until we resweep that low inside that 1 hour fair value gap, because after we retraced into that gap, we took that most recent internal high. So I'm hoping this is all making sense. I'm pretty much just spitting information. But yeah, and then on the lower time frames, right, I needed to rebalance into some form of gap right here. So essentially, though, these are all conditions. So, I mean, I know I keep saying, oh, we could bounce off here, and then I'm just going to wait until, let's say, we hit data lows, we hit data highs. How are we reacting off that? We sweep this internal low right here. How are we reacting? So one thing that I'm doing with my daily bias, right? So I'm going from all the way from the daily down to 4 hour, 1 hour, all these time frames. I'm also paying attention to a correlated instrument, which in my case is the S&P 500. I'm saying, oh, did the S&P 500 take my intended draw on liquidity already? And I'm also just looking at internal structure the whole time. So now we're just going to wrap up, and I'm going to give you my final concluding thoughts along with my key takeaways. So I know I just talked for a real long time, and it honestly might have been boring at points, but if you watch this, I really hope you're able to come away with some good takeaways and you feel like you learned something. Because honestly, I'm kind of new to making these strategy videos, and this is the first time I've really made like an in-depth strategy video. So this is honestly kind of new to me. So I would really love whatever input you guys have, things I can improve, things I should do in the future. Please just let me know whatever it is. Let me know. I want to hear it. And also, one last thing to remind yourself about daily bias, just because I do something one way does not mean you necessarily have to do it that way. There's many people that have their own methodology for how they frame daily bias. This is my methodology. Well, I believe I have a good method to determine daily bias, but if let's say you're using a completely different strategy that's totally different than mine, you might need to use some different form of determining daily bias. I believe you can use mine as a good structure, and from there you could say, oh, what I'm seeing over time is I should look at this thing instead and kind of change it and adapt it to how you want it for your specific trading. Because in trading, it's a very personal thing, right? Everyone looks and says, oh, what's this missing piece? What's the best way to determine daily bias? But in time, you're going to find out that things just work differently for different people, and you're going to have to try different things, experiment, and eventually you're going to find something that just clicks with you and starts working with you over time. But to wrap this up, if you're looking for a prop firm to trade with, my favorite prop firm is Alpha Futures. I'm going to put the link down below, as well as my discount code, which is code TIMB272. That's going to give you 10% off all Alpha Futures evaluations, or whatever the best current discount is. So I highly recommend checking it out. They are my favorite prop firm. And that software I used to do that backtesting was FX Replay. They're my favorite backtesting platform. I'm going to put their link down below along with Alpha's. I'm going to put my discount code, which is code TIMB272. That's going to get you 15% off FX Replay. So I highly recommend checking it out as well. And lastly, I'm going to put the link to my free Discord in that pinned comment. So definitely join that free Discord. I'd love to speak to any of you guys in there. But if you watch this all the way through, I'd really appreciate it if you give me a like, put a comment down below, and subscribe. I also just hope you have a great day.